This is Inside the Wolf's Den, an entrepreneurial journey with Shawn and Joni Wolfswinkel.
Welcome back to Inside the Wolf's Den with your hosts, Shawn and Joni Wolfswinkel. Today we have a special guest with us, Louis Landin. How are you, Louis?
I'm good. Thank you for having me. Appreciate y'all. Thank you so much.
Well, thank you for joining us this afternoon. And so just a quick bio on Louis. So Louis Landin is an agent with Goosehead Insurance located in Spring, Texas. Louis joined Goosehead because of his unwavering commitment to take care of his clients. Using cutting-edge technology to shop with dozens of A-rated insurance companies in just a few short minutes, he can find the right coverage at a competitive price. He takes the time to review all options and customize the policy based on the unique risk and desires of each client.
I was from South Texas. I came up here to finish school, and I was able to finish. And my brother-in-law, who works in logistics, is like, "Hey," and I didn't really have a direction at that point. Still out of college, and I'm guessing a lot didn't, but I definitely didn't. And he's like, "Yeah, get in logistics. Import export. It's my company. If you have a degree, they'll definitely hire you." I was like, "All right." Okay, so I get my application in, and within a month I got hired, and I did that for about 8 years, and that's actually where I met my wife, Catherine. And from then on, it was just, a kind of a grind within that occupation. It's just a small chink in the chain, if in a little cubicle, it was just not. I was just finding it mundane, and it wasn't. It's kind of repetitive. You go into a little cubicle, you work there all day, and you don't get anything out of it, and you just, all right, here's your paycheck after 2 weeks, and that's it every day. And I just was looking for something different, and just wasn't happy. My uncle, he's told me for a long time, he's like, you should get into insurance. He's one of the bigger names. He's an insurance agent for one of the bigger names. And he always told me, he's like, "Hey, you should get into insurance. You should get into insurance. You should get into insurance." He's told me that since I was a little boy. And I always saw how he lived, and he lived pretty comfortably. And when I met my wife, her parents were both insurance agents. Yeah. And then they kind of both mentored me to look into that at that point. And it was even more direct because I'd see him just about every week. And they said, you should go the independent route, and not with any of these bigger boys that they were kind of attached to. They just thought it'd be a better fit for the newer scratch agent. A scratch agent is just an agent that starts from at zero. So now they give you a better format as far as going to something bigger where you're in debt. So much, and you have to go and put so much into this agency where they can just take it away from you year over year. So he came to the name of this one insurance company, Goosehead Insurance, and I sought them out, and I actually took him with me, my father-in-law with me to go to this discovery day, is what they call it. And you learn about my company, Goosehead Insurance, and he had only good things to say about it. It reminded him of what that company he still works for used to be back when. But that kind of he helped me make the decision to jump in and throw everything at it, and that's how I got started within the company. It wasn't a month after I signed a contract and bought my franchise in 2015, and it's just kind of gone downhill from then.
Yeah. That's
awesome.
So tell us a little bit about Goosehead. What sets you guys apart in the industry? Give us a little rundown on what's the difference between, especially, and you can relate it more to maybe investors, because a lot of listeners on our show are going to be not your homeowners, they're going to be investors looking for either multifamily or single family homes that are rentals. But what sets you guys apart from different other agencies out there, other names out there in the industry?
We're not solely stuck on one company. The good thing with us is the power of options, and you get that with brokerages, especially ours. We vet our carriers very heavily. We have a team that just strictly looks for the A-rated carrier. Once a company, an insurance company, starts dipping into that B rating, we look to fire them because that's our name on the line. But our loyalty is for our clients, not for a specific insurance company. So that's kind of what sets us apart. Is we're not stuck on one option. We're not stuck on one name. We have a plethora of names that we can put a specific risk on, depending on the situation. Buy and hold, fix or flip, multiple portfolios, commercial even. I mean, it all comes with that name under Goosehead. You have the option to shop, and that's what we provide to our clients. Or some of the bigger names, you're just like, oh, you're stuck there. Yeah, and that's all you have.
So explain why an A-rated would be so important. When you say A-rated, obviously it's probably the ranking of the insurance companies that you're underwriting for. But explain, why that matters, and especially with some of these bigger storms. Have you seen some of these lower-rated insurance companies go under or belly up?
In regards to paying out on claims, they have a good record. That's kind of what you want as an insurance carrier. I mean, and that's where rates can kind of come into play when you're dealing with lower than the A rating, B, C, D. I mean, that's all part of an insurance carrier's shtick. I mean, you want to have that rating to be a valuable option for any consumer. Because if not, you can just have any run-of-the-mill insurance carrier and pay, it could be, I don't know, half the price. But you're also getting the company with that. I mean, you're getting their claims experience, their service, their reinsurance, their performance relies on that rating. So you're buying the performance, basically. Correct. So the better rating you are, the more the insurance company is going to perform for you.
And most people don't. It's not until you have a problem, right? That most people don't.
That's exactly.
They don't know that it doesn't matter until there's a problem. Then you're like, well, why aren't they paying me? Or why are they challenging everything? But yeah.
Sure. Yeah. It's exactly. It fits hand in hand. I mean, you can't expect one to outweigh the other.
Yeah. Louis, in your bio, you mentioned that you are backed by a service team that has the highest client loyalty rating. So talk a little bit about the customer service aspect of your company, and what are some things that you're doing, or how do you approach a customer service and client relationships differently than maybe some other traditional insurance companies?
So that's one of the key points of my company that sets us apart, is that we have a dedicated service team strictly for our clients. Strictly for commercial, strictly for life. There's always a service team strictly for that. We don't have a service team in our office. We have actually three main corporate service branches that service the east and the west and the central. So just so to keep up with the time zones, but for any need from 7 to 7 p.m., the client can call into the service line. They can chat. They can text. We even have an app now that they can use to go directly to service if they need to make any kind of changes, from LLC to personal LLC, make changes on coverages. They can handle it directly and directly with the service agent, the live service agent.
Nice.
That's awesome.
It's the biggest quality with our service team.
Yeah. Is there anything you're doing like proactively to reach out to your customers? I mean, I know that we often get like, oh, I haven't shopped my insurance in like 5 years, right? And a lot of our clients don't know what they don't know. So, are there anything that your team is doing proactively to say, hey, you might want to look at this option, or,
There's not a proactive shopping operation that we have. But there's notifications being sent out to the client just about every month, almost, I would say. But they're getting constant notification on their policies.
Awesome.
And now even more that we just had an app roll out here in this last month and a half or something.
Oh, nice.
But an app just rolled out that all clients are going to be getting access to.
Nice. And that doesn't matter what insurance they're underwritten.
No, it doesn't matter. As long as you have an account, you're going to have access to that app. You're going to get it. You just have to download it.
Cool.
But I would say, that's the newest form that I learned that's happening right now.
Awesome. One thing I know why we really wanted you on the show too is out of all the properties that we manage and the clients that we work with, and even for Joni and I personally, one of our biggest pain points right now is insurance, right? It's I'm going to ask you multiple. I always do this. I ask you multiple questions, but then it's like
in one
response.
That's everyone's pain point.
But so I'm curious, like, what can you get into a little bit of what's driving? Why are insurance rates or premiums just skyrocketing? And then explain the why, I guess, or the reasons why it's happening, and then we'll get into some questions about why is this happening, and is it? Oh, the other question I wanted to ask you with that was, is this a Houston-based issue or problem, or is it because of our proximity to the coast, and all that, and hurricanes?
Definitely.
Yeah.
I mean, let's start off with, I guess, the main reasons why, and where ours is different than interior.
Okay.
So the main reason why is that the losses, I'll say the losses in the last 5 to 6 years have definitely hurt the insurance industry in regards to claims payouts, premium increases. That is the biggest factor right there. The labor, materials have all increased, so that's going to also increase the premiums, because insurance companies are trying not to go out of business, so they're going to increase their rates so that they don't. Mm-hmm. We know that insurance carriers have liquidated themselves. I know of more than 3 that we had in our area that we would use in our area that have, and it's just because of that fact their premiums were not making up for the losses, and the losses that we had were significant, especially like the 21 freeze. That one hurt us. And you can see it, you can feel it right after that, because we have to pay for it. I pay insurance too, and the good thing with insurance is that everybody needs it, but everybody's feeling the same pain, and it's all stemming from that. I mean, the losses, the losses have made that happen, and then the economy didn't do well. That hurt it too. So they're trying to make up in some way. The only way the insurance carrier knows how is to increase the premiums, but that's the main reason. There's repetitive losses, and I would say the economy has not been in our favor in the last 5-6 years.
And I mean, it doesn't seem like we're going to be.
I was going to say, what do you think the future is going to?
I don't think it's going to change, right? I mean, we're going to keep having.
That's a tough one.
Yeah.
That's a tough one. I would see it's going to be more normal than it is going to be better.
Yeah.
I would say just accept it and try to do business as usual, because it's not going to be a quick change. It's going to be more of a standardization.
Yeah. And I like that, accept it, because I think, for a lot of us, that's sometimes hard to do, right?
It's hard. It's hard because, the increases we've seen, it's phenomenal. I've seen from, 15% to 20%. That's almost above what was, 3-4 years ago. 15-20% was like, oh gosh, that's a high increase.
Yeah.
We're seeing as high as 300% increases, being the lowest now when we shop out our market now. On certain situations. Now, another big risk is, we're closer to the coast rather than like an Austin or San Antonio. Being closer to the coast affects us also, because that's where they can put the increases on the risks that are more risky than the ones that are inland, that don't get blasted by hurricanes. They just have, they got to deal with hail, but not as much as Dallas does. Now, Dallas is not great for insurance either, just because they get blasted with hailstorms and tornadoes, and it's the rates there definitely reflect that. Where San Antonio, Austin, you'll have a better, more efficient, cost efficient insurance premium, but that all comes into effect. That all has a place.
In your opinion, and this probably doesn't help me, but in your opinion, does it, for an investor, does it make, I guess it just depends on the investment property. I'm just wondering, does it make sense to, but like you said, you go further, there's areas like Dallas, like one of the alternatives, it was Houston or Dallas, especially as we sold a lot of turnkey investment properties. It was always between Dallas and Houston, people were deciding. And I guess neither one, right, is for insurance wise, favors the other. They're both-
Insurance, it used to be Houston was hard about a year or two ago, but it turns out Dallas is becoming very hard to insure. There are options. It's just it's not easy to come by a decent premium over there. Just even carriers. Carriers are hard to come by there than here. There's a lot more options here than there.
Yeah.
I would say.
And I would think that, I'm hearing not just Texas in general, right?
Florida.
We're hearing it everywhere. Even in New Mexico,
it's
we
everywhere.
had the fires, right?
California, right?
California.
California.
Yeah.
California.
So,
Can you imagine
Done.
that
Well,
they were already leaving that state as they go, and then the damage
Yeah.
has got to be crazy.
Louis, I want to
It is.
ask you two questions. The first one is so for the investor that's listening to this show and is looking to buy an investment property, what tips would you give for the ones that are on the fence because insurance has gone skyrocketed and they're kind of sitting on the fence in fear? What tips or advice would you give that investor looking to buy?
I would say what's more important, cash flow or coverage? Because you're going to have to deal with one. So you can get cash flow and take a higher deductible type of policy, or you can get the coverage. You have to take one or the other. Sometimes it's good to have both, and you'd be not lucky, but there are options out there. It's just, what do you want more? What do you want more out of your investment? Everyone's going to say cash flow. So, all right, increase your deductibles and take on some of the risk yourself with paying out for the smaller claims. You know what I mean?
Yeah. And I would think too, just be more realistic with your numbers, right? I think that when we used to buy in massive amounts of properties, we would always budget at our insurance. So I think you just need to accept it and know what it's going to cost you, right?
Do you have
It changes. It changes. So for the house, you have to be. It's not. You can't guess anymore. It sounds like, we're saving this number for our insurance. It's not that number anymore. It's, I need to find out what my number is before you can go into the house. So that's where, you can call Catherine or I, and we'll get you a number for that house. It's like, this is what to expect. So that's kind of what I set them up a realistic number for. Don't say, I'm saving this amount. I can expect this amount. You can't expect it because it's different with every house.
Right.
You can't just have a number in mind. You can't have a number in mind. It's going to be different.
Yeah. And then the last question I have, because another question we get is, for the investor that has rental portfolios and they're seeing the increase, the 300%, whatever increase in insurance, they're like, oh my gosh, I need to sell this property right now because my insurance is going up. What advice would you give to that individual?
I'm not an investor, but all I can say is hey, I can shop out the market and see if we can get you back down on insurance with another option, because there is going to be another option. But that's all I can give. I wouldn't know how to manage his finances. I just know what's happening with my market, and I know what I have, and I'll throw my best fastball at him. You know what I mean? I'll give him the best I have to help him to try to save more money and cash flow again. But when it comes down to that, he's going to have to be, he's his master of his own ship.
Right. Totally.
Give me some options what levers, you've mentioned a few, but let's talk a little bit about some of those levels. So I think, probably the rating or, the deductibles. What is, where am I going to get the largest reduction? Yeah, because I think at some point it's almost like it doesn't change much. But go ahead. Let's talk about deductibles, and then I'll follow up with another one.
The biggest levers are water coverages. You could give those up.
Okay.
Deductibles.
When you say water coverage, what is, define that?
There's 4 water coverages offered in the state of Texas. The first one is sudden and accidental water loss. Okay. That typically will cover to the policy's limit. So the coverage A that you typically would see, it's normally covered to there. Your standard, which is called, I would say, your DP3 policy, that standard landlord policy is going to be covered to the policy limit. Always included most of the time. unless it's specifically stated on there.
This would be water breakage, is like the freeze when a pipe busted and flooded the.
Exactly.
Yeah.
21 freeze, pipes broke, the water damage caused from that. That's the coverage you'd have.
Gotcha.
Or you stumble and fall. You're putting boxes away in your attic. You stumble and fall on a PVC pipe. Boom, there's water gushing out. But by the time you get to the main, there's damage that's done in one of the rooms. It happens. But that's sudden and accidental water loss. The next is water backup. Water backing up through your sinks, drains, toilets, dishwasher, washer. If water was to back up and out and cause a loss, this is an added endorsement. These next three are added most of the time.
Gotcha.
So if it's not something you have in your policy and you really want it, ask your agent or ask me. But I'm going to give you these options when you talk to me. So that's going to cover you up to $25,000 typically, normally. Some carriers limit out at 15 or 10, but that's always an optional water endorsement that people can take off or add to the policy. If it's already added, that's another lever we can pull to lower your premium.
And that doesn't include, because we own a plumbing company, so we get to ask this a lot. That doesn't include, that's just only damage if it gets backed up and water damages your room. That doesn't include fixing the pipes, does it? Like, say you have a bad sewer line. Is that included?
No. So wear and tear, the way you bought the house is wouldn't be covered under the policy.
Gotcha.
So wear and tear wouldn't be covered. But let's say your infant stuck up, a Smurf toy animal down, your toilet bowl and it backs up. That would be covered under that type of issue.
Gotcha.
And then, that was the second water coverage. The third is foundation coverage, which is not really foundation coverage. It's covering the pipes and plumbing running through and under your home.
Uh-huh.
That's the same amount of coverage, either 25% or 25,000. Like I said, another lever. If it's on the policy, you can remove it to save you a little money, or you can have it.
Mm-hmm.
It's just, what do you want out of your policy? So covers that kind of situation. The last water coverage is seepage, slow leak, and that's the leak in between the walls you don't see. Maybe your AC is condensating at a heavy rate. It's not hitting the drip pan, and it's falling on the outside of the drip pan onto onto the one part of the wall that you don't see. And then you notice mold growing. It's like, oh, it's stemming from this. During the summertime here in Houston, it can happen, but it's going to cover to the policy limit. So whatever coverage A you have, it's going to cover that to that amount. Now, some carriers have levels of coverages there, but that's your four main water coverages in Texas that can be offered, that you can either have on your policy and remove, or add to your policy and get covered for. But under those four are levers. Well, the three are levers. Sudden and accidental water coverage, the first one we went over, is most of the time automatically included.
Can you remove that to get a discount?
You can't, depending on the coverage level you have. So the highest coverage level you have in Texas is a DP3.
Uh-huh.
A DP1 will not have it unless you actually endorse it.
Gotcha.
So DP1 is the lowest level of coverage you can have in Texas.
Gotcha.
Or DP3, this is all landlord policies.
Yeah.
DP3 is the highest level you can have. A DP1 is the lowest one you can have.
Okay.
So on a DP1, it will not be on there, and investors can get that one just to create a little more space for cash flow. But it's you're missing out on a few coverages. So that's the thing. It's kind of a give and take.
Right. And what deductibles are you seeing that?
Investors, a lot of times they're going for 5. They're going for the highest. They rather pay any claims out of pocket, any smaller claims, and mostly deal with the catastrophes with through the insurance companies. Mm-hmm. So there's been a shift going to that 5% deductible lately, and I know why.
Yeah,
everybody wants the cash flow. It's kind of common sense,
right?
But that's 5% on the value.
That's right. So you have 300,000. That's 5% of 300,000. You're looking at a $15,000 payout or out of pocket expense before you see any claims payout.
Correct.
So and I tell clients, like, hey, look, this is going to be a catastrophic type of claim when you're reaching to this limit. So know that before getting into this, that this is what we're doing. It's like, oh yeah. I'll be cash flowing a lot. If I have to come out of pocket on any smaller claims, I'll do it myself. I was like, all right.
We had so many clients like wanting their fences and roofs, all these claims, and then like we file the claims for them, and then they find out their deductible's like 15 grand or 20 grand. It's like, well, we told you, so it's like no luck, you know, and because that's the cost of just the repair.
Right.
But they they didn't pay
There's no
attention.
chance.
Yeah. Talk a little bit too about replacement cost versus actual cash value. So like that difference.
So replacement cost is like, kind, and quality. So you get, I guess the best example I give clients is, you know, you lose a new pair of socks in a fire, they're going to give you the either a pair of new socks or the same amount to buy new socks, where actual cash value is depreciated. So they're going to give you the cost of those old socks you lost in the fire. They're going to give you the cost of that.
Okay.
They're not going to find old socks for you. They're just going to give you the cost of those old socks. So that's the easiest way to explain actual cash value and replacement cost.
And
So
are you finding investors going that route? Or what's your thoughts?
not only if they absolutely have to. From my experience, they've always still kept the replacement cost. I haven't had many go actual cash value, just because at that point, if you have a major loss, you're going to be out. You're definitely going to be out.
Yeah. How much different in premiums is there? Would you say, like, is this weighed that much or not really?
Not really. When it doesn't make that much of a difference to go replacement cost. I push for replacement cost just because it's not a good policy to put together anyway. When the client does end up with a claim, he's going to be like, well, why'd you give me this policy? You gave me an actual cash value policy. They can easily put that on any agent and like, well, why'd you give this to me? It's like, well, you should have told me otherwise. So I give them the differences and I let them make up their mind, but I don't sway them towards that option at all.
Yeah, because when there's a problem, it comes back on you.
Right.
Yeah,
it definitely could. I mean, it's those litigation and all that stuff will pass and everything's signed for. It's just still, why go through the headache if it doesn't cost you anything?
Correct.
Or anything more.
Right.
Go ahead.
No, I kind of had a selfish question, more because a lot of property managers are listening to the show, and obviously, we will not manage a property if it doesn't have the proper insurance in place. But one of the other things too is property managers getting named as additionally insured. So, do you have any tips on what that process looks like for property managers?
It's not bad. I mean, it's a pretty easy process. I mean, it's just our service team actually can do that on the back end. If I know the information on the front end, it's easy to set up. I mean, it's almost like just adding another name to the policy as I set it up. Was that the question you were asking?
Yeah, that's all. Yeah.
It's a really easy process.
Does it cost the landlord additional money to put you?
Nope.
Awesome.
Not at all.
Okay.
Not at all. And even let's say y'all's property managers could call in for a specific policy wanting to be added. If the client is like, oh, can you handle this for me? You can call in for that specific policy, being the property manager. Hey, can you add me to this policy, to the service line, and do it?
Absolutely. Yeah. If storm happens, like, we can call in the claim and not have to write, or does the homeowner have to call it in?
It'll be no. Homeowner has to be involved in that process.
Yeah.
But it's still, I mean, everybody's going to have to sign off on it.
Right.
Y'all as property managers, additionally insured, if need be, then y'all have to all sign off on it. You'll all get notifications about that process.
Awesome.
When it happens.
Love it.
Just speak a little bit to flood insurance. I try to push clients away from flood, anything in the 500-year or 100-year floodplain. But what has that market been like recently?
So that's changed. In the last 2 years, FEMA's gone out and they're basing their rate on the home and location itself, other than having a standardized rate for every X 500-year home at this moment. So every home that was in the 500-year plan had a standardized rate back, I say 2 years ago, it could have been 3 years ago, but they changed that to be per home, per location, size of home. So it's now they're basing it on that, and not just a standardized rate anymore. FEMA backed policies. So their rates have changed significantly, and all that drives the private flood carriers to drive it up a little bit also, just because, well, they want to be in the same market too. So there's private flood carriers out there that will rate sometimes better than FEMA backed policies. So that's another option for your clientele to look into, which we have. We have both private and FEMA backed flood carriers.
Okay. What's your recommendation on investors that are buying in Houston that are not in the 100-year or 500-year floodplain, but have some concern? What is your recommendation on flood insurance?
I would say if to that client, if you are concerned and you experience anything what a lot of investors experience with the Jersey Village area, Rice area, Harvey. I mean, if they had and are worried about it, just get it. If you want peace of mind, just get it. It's not, you can get it no matter what. You don't have to. There's no qualification. If you're worried, get it and be done, and you can just walk away and vacate and know that you're going to have coverage for flood.
Yeah, peace of mind.
One thing, peace of mind. And that was one thing when Harvey happened. I mean, it was yeah, exactly. I mean, every insurance agent wrote more flood insurance policies after that storm than I think any other year. Just because I think it was something like 35% of the people that were in the X zone 500 year got flooded. So it's just, it was terrible. It was unfortunate and terrible, and they never want to go through that again.
Right.
So my family, their house they had on the market got flooded. And it just, some were unfortunate. They were unfortunate. They got the water released under the Addicks Reservoir on 6th and Memorial, and they had to get flooded. It wasn't because of the storms. Well, it was because of the storms, but the engineers released the levee, and it flooded all those houses down that street. And unfortunately, my in-laws were part of that.
Yeah.
Luckily, they had flood insurance. They said they've been paying flood insurance. I think they calculated it out. I would say about 15 to 20 years. They started paying flood insurance every year. It paid out. They were only paying about $450 a year at that point. That was the rate. $450 a year for about 20 years, and it finally happened. Yeah. And they had coverage, but only because they're insurance agents, but they had coverage for it.
Yeah.
They were worried.
Yeah.
Better to be safe than sorry.
So we've had a few clients, especially over the last year or two, that have you used to hear like only the crazies kind of do it, but more and more, some investors are starting to think about self-insuring.
Sure.
And because it's just gotten so expensive, it will require them to carry like liability insurance, even if they decide to go that route, just to protect if somebody slips and falls or something, But what's your thoughts on investors self-insuring, and what recommendation would you have for them? When I say self-insurance, in case you don't understand what I'm saying, they're getting rid of their. I'm sorry for the listeners out there. If you're listening and you don't know what that it means, they decide to not carry homeowners or rental insurance. So like the house catches on fire and it burns down, they're going to not have insurance because they look at it as like, well, if I'm going to carry insurance for 10 years, don't have any claims, or 20 years, like kind of like what you just said with your in-laws. But and in that case, it paid off for your in-laws. But some of them think that they'll be better off, right?
Right.
If they.
No, I definitely hear it, and I've had clients that completely pull out of insurance. That they've had policies on policies on policies. Like, Luis, I don't want to pay this anymore. I just don't want to do it. I don't want to give the insurance companies my money. I haven't seen anything for it. Now, I don't know if they've had a loss or have dealt with a loss before, but that's what I've gotten on a few clients, and they'd rather just take care of themselves, which that's fine. They have that option. I can't control them. All I can do is like, hey, just, that house is worth 250, 150, 250. You're going to be on a complete loss. You're going to be out that, and you're not going to recoup anything.
Right.
Like nothing.
Yeah.
So it's in their hands, and they're taking, they got to be aware of that possibility of something happening, and they're not covered. That, for me, I would be terrified just because I know what could happen. I know what I can lose. I don't want to lose that chunk of amount of money at one time. It's for them, they don't see the investment in insurance to that it makes sense. And I get it. They want to cash flow even more, even harder, make more money sooner. I get it. I understand. But it's not something I can say, no, you must get it. That would be probably the mortgage company saying you have to get it if they had a mortgage. Now, if they don't own the house outright, then they have that option to do it. I can just give them the scenario and let them be on their way, and I'll set up your policies as you like.
Yeah. Well, we've all had experience, like terrible experience. We've seen it firsthand, right? So a lot of them probably have not experienced a disaster quite that big. So.
Right. So I've seen it all.
Yeah. So tell us kind of what's next for you and your franchise and your Goosehead location. What's some of the things you guys are looking into? And some new, I guess you mentioned one was the app, but
so the next thing is the app is the latest, but for my agency, we're just looking to grow.
Yeah.
Looking to grow my agency directly with sales agents. So that's what we're doing on the home agency.
Yeah. And growing.
Other than that, just it's a simple process. Our systems make it easy for us to shop.
Yeah.
So just rely heavily on them and try to expand on our agency directly.
Yeah.
That's awesome. So what advice would you give to someone looking to start a career in insurance?
First, I'll tell them, it's not quick. It's not a quick turnaround with money. It's a marathon and not a sprint.
Mm-hmm. Love that.
You will accumulate eventually, and you have to stay grounded and grind it out. It's going to be a grind, and let them know that first, and that it's not easy. But if you have desire and you stay hungry, you will be fine. But that's what I would give them. That's the advice I would give them.
It's like any advice being an entrepreneur, right? You got to be willing to work. You got to be willing to grind.
It's the same. It's the same mentality. Is if you're driven, you'll be fine. If you're driven and you can stay the course, you'll be just fine. If you expect it to come to you, and I made the mistake my first year about my franchise, and I was like, oh, I'm a business owner. It's just going to come to me, and I just wasn't growing. I wasn't growing at all, and I was like, well, what am I doing wrong? And then I went and sat next to a high performing agent, and I was like, oh, and that opened my eyes. I mean, just the way he approached his day, the way he attacked clients, the way not attacked but sold. His marketing strategies were. I mean, he was one of the. I was sitting next to a couple of the highest producers in my company, and just listening to them speak, listening to following their cadence, trailing them to go and market. I mean, they're out in the morning, in the afternoon, and they do the same thing 4 days a week, and it's just they're animals. They were animals, and that's who I learned. That's how I learned how to get up off of my ass, in other words, and get out and start selling correctly.
Yeah,
that's awesome.
How long would you say? Because I think we there's a lot of younger listeners that, like you said, it's a marathon, not a. But put that in perspective for some of the younger generations. So they're in their 20s. They're wanting to start a career maybe in insurance. Like, what is a realistic outlook when you say grind? So I think because some of them think like I'm gonna grind for a year and then I'm done, you know. And it's like put my feet up, and I know that's not realistic. So what is that like? Kind of what does it look to have a real established career in insurance? What is that time horizon to where you're more established? Is there?
I would say a realistic expectation is like you'll probably be you'll have a good career. I would say year 5. It just depends how quick you want it. I've seen really productive agents have a fantastic agency in 3 years. It's just, what are you going to put into it? I mean, how many calls are you going to want? How many phone calls are you making? I mean, how well can you cross sell? I mean, that's all part of it. And just having that attitude and not giving up and keeping your head down, that's kind of what to expect. I mean, it's weekends, vacations. In the beginning, there's none. You're always on call. Even now, you're always on call. Yeah. Everything is going to another agent of mine that is trying to take over for me. At this point, it doesn't end. Even now, I go hunting. I'll take calls. I'll take texts and calls at the blinds. Fishing. Same thing.
Yeah.
Vacations when we go out of town, out of country, I'm still getting calls and texts and emails. So it's just it doesn't stop.
Yeah.
Just so your time is your business.
Yeah, I love that. You may have to say no now, until you get to that point. Lots of no's.
Exactly. Yeah, and you got to get used to it. You got to get used to that and get over it and move on to the next one. Yeah. You can't make everybody happy. That's one thing also. You're not going to make everybody happy. You're going to have tough skin and move on.
So how can our listeners get a hold of you? They're looking to just get a quote on right now, a lot of our clients are, shopping around and trying to get better rates.
So I have a website. It's you can look it up, Luis Landin under Goosehead. It'll take you directly to our website. There's a link to where you can get rates. It'll queue me up for a call to you and an email. Both Catherine and I are on there, Catherine Landin at Goosehead and Luis Landin at Goosehead. Awesome. I'll send you direct sites to start getting preliminary quotes. And from there, I'll get a response on my email, and then I'll make the call right away, at least within 24 hours to get you set up on your new policy, home or auto or landlord, life, commercial, what have you, whatever the risk.
All the above.
And then say somebody's interested in talking to you about becoming an agent within your same website or same.
Oh yeah, it has my direct sales on there. I would say just call me. I'll connect you to the right person. I'll get a feel for what you're looking for. If I think it's going to be a good fit, what you've learned about it so far, and I'll connect you to the right people at the corporate office to get that process started. Whether you're interested in an agency or just be a salesperson. I know agency owners that are looking for salespeople, admin positions. So it's just, depending on what you're looking for, we're going to have a fit somewhere.
Awesome. And we'll put all that in the show notes. So if there'll be links and all that to connect and hopefully get in touch with you soon. So
yes.
Absolutely.
Well, we appreciate, you taking the time today and going over everything insurance and all what to expect.
It's on topic right now.
Yeah, it's very, very hard.
But we appreciate you today, and anything we can do for you, please let us know. But thanks for taking the time today.
Thanks so much.
Joni, Shawn, thank you very much for having me.
Awesome. And so just tune in next week. We'll have another guest with us next week. But until then, please rate the show, and we'll see you all next week.
See everyone.
You've been listening to Inside the Wolf's Den, an entrepreneurial journey with Shawn and Joni Wolfswinkel. Tons of entrepreneurial podcasts are out there. Talking. But Joni and Shawn are living it every single day. Their portfolio now includes many franchises and medium-sized businesses. We talk about the trials and motivators of successfully running a business. Join us again soon for another podcast. But until then, reach out on the website at InsideTheWolfsDen.com, on Facebook at Inside the Wolf's Den, on Instagram at Inside the Wolf Den. We'll see you again soon. This is Inside the Wolf's Den. We'll see you next time.